Welcome back, Aereheads. You're here for your 9th video in this TA series. We are chipping away at them, where we try to fill up your toolbox with all the tools, teach you how to TA to become a master trader. And essentially what I'm doing is showing you my method throughout this series. I get asked a lot how I do it. Well, watch the series. This is how I do it. This is how I make six-figure wins. I have six-figure days, right? Not let alone my year. Now, little caveat there, I have bad weeks and I have bad months too sometimes, but you want to be right more than you are wrong. That is our goal here. We're going to be talking about alternative methods to trading crypto. So I talk a lot about trading perpetual futures on this channel, but there are ETFs, leverage ETFs, where you can't be completely wrecked and liquidated on. There are spot plays, and we're going to get you those in this video series. A lot of you guys are struggling. I see it in Discord. You're struggling with how to trade leverage futures. I'm here to tell you, you don't need to. There are alternative methods. We're gonna walk you through that today. Before we do that, make sure you guys smash that thumbs up button, turn on notifications. It helps us out. I put out a video every single day. I'm in Discord every single day, breaking down all the price movement, price structures. And you know, more important than that, I'm making calls, and I'm making calls on alts. I'm probably right on 8 or 9 out of 10 of them, which is a pretty good track history. You know, we called this most recent downturn. So hop on in, give me a try, discord.gg/Alpha Aere, and let's just jump right into the video. So just a quick recap, right? You go to youtube.com/@Alpha Aere, and what you do is you can just go right there. That's my playlist, right? These are all the videos in the playlist, all the way through video number 8 so far. Start at video number 1, link down below, work your way through the series. If you are not in a winning position on your portfolio, if you are breaking even or struggling to take your trading to the next level, this is a great series. This is a series for you. Start at video number 1, work your way through it. I'll walk you through it. I'll hold your hand through it. And at the end of it, turn the keys over to you. But today's video is going to be focused on leveraged ETF, spot plays, and some other methods to get in on trades, how to actively trade. So most exchanges, right, with the exception of like the big US exchanges like MEXC, offer leverage ETFs. You can trade with no liquidation risk and enjoy compound interest. So the ticker for these are BTCUSD.3L, and then you can find them on KuCoin, Bybit, Gate.io, MEXC, et cetera, et cetera. So I personally use MEXC for these. Use whatever exchange you want. I don't really care which exchange you use. Now you can pull up these here. You can see this is the 3L and this is the 3S. So this is the short. You're 3 times leveraged on a short position. So it's kind of backwards, right? So you buy the contracts here in the position. You want this to go up, and it would seem like it would be reverse, right? Like you want the shorts to go down, but you're buying the short contract, so you want it to go up. Same thing with the long. I mean, when you want your contract to go up. And guess what? These contracts are offered. They're 3 times ETF. So the ticker again was, it can be whatever. So, you know, LTC3S or LTC3L. You can find these all in TradingView. So Litecoin, ADA, XRP, Link, DOT, SRM. I mean, it's got, look at this. I mean, I can keep scrolling and scrolling and scrolling. So it's got a lot of them that you can trade. Bitcoin as well is on there, obviously, one of the big ones. So, you know, you can just click it by doing ETFs up here, leverage ETFs. And which one you want to trade? You want to go short on Bitcoin without the liquidation risk. Thank you for your interest, blah, blah. It's just telling me I'm not signed into any account here. But here is the trading screen. You can see the current price right here of this ETF is 0.012419. I always recommend doing limit orders. You know, you got your money in your account. You can slide the slider bar to how much money you want to use, and then just place the order for it. And you're in the position. So you want this to go up. That means Bitcoin's going down. So it's a short ETF. Does that make sense? It should. But that's it. That's how you do ETFs. So then you got all the other ETFs on here for you. Like I said, there is tons of them. I mean, even Caspa has an ETF on here if you want to go long or short on anything. You know, BTC, BUSD, TUSD, you can use it all to enter into a position here. But this is, you still would do the normal TA to figure out which way Bitcoin is going. But unlike traditional leveraged perpetual futures contracts, you cannot be liquidated. So you got the 3 times long, 3 times short here. It's pretty straightforward, I even have a wonderful explanation, articles, facts, beginner's guide, right? Click on that. It walks you through exactly what to do, what everything is, and it explains it in like simple to understand terms for it. Everyone should read that. You should always know what you're doing before you do it, right? So the 3 L's, 3 S's are a good way to dip your toes into trading without the risk of liquidation. You still got to watch your positions. You still need a TA. You still need to know which way the market is going. But you can do that without the liquidation risk. Just to put a bow on this part, so 3S and 3L is 3 times leverage. If Bitcoin goes down 5% and you're in a 3S short, right, you're using 3 times the money. So a 5% drop would be a 15% win for you because you're just 3 timesing your money, 3 timesing the move. Now, there's a flip side to that, right, which is you're still can lose money. Even though you can't be liquidated, you can still lose money. So if you're in a short ETF at 3 times and the price goes up 5%, you're going to lose 15% of your money. However, once you start going up further than that with a traditional 20 times leverage play, all your money is gone. The entirety of your money is gone. Where here, it's just the percentage that you're opposite of on the trade. What you see me trading a lot, and a lot of other traders, are perpetual future contracts. These are perpetual contracts, meaning you can hold them in perpetuity. They don't have a closing date like puts and options do in the traditional finance markets, right? But they are not for the faint of heart. They are not for the amateurs. You shouldn't be using them at all, and especially shouldn't be using these with high leverage unless you're winning. If you have a losing portfolio, if you don't have more money than you started with in your crypto trading portfolio, right, in your crypto wallet here, then you have no business trading anything higher than like 1, 2, 3 times leverage anyways, because you're losing. The higher leverage you use, the more and the quicker you're just going to lose it. And that's just facts. That's just, as the kids would say, that's just no cap, right? So because of that, use 1 times leverage, right? Slide the slider down to 1, or if you need that extra boost, 2 times, maybe 3 times leverage. Your stop losses are going to be more forgiving, more liberal. Your goal right now is to learn and to try and be on the right side of trades. As you get better and better and better, that's when you adjust your winnings and your risk to reward ratio. You can take on more risk when you become a better trader. Until then, you're just going to flush your money down the drain constantly. It's that simple. But here, at least with a 1 times, you can short, right? You can short Bitcoin on a 1 times leverage play, which means there's no leverage there. It's just however much money you're putting up. So if it goes down 1%, you make 1%. Now, if you do 2 times leverage, if it goes down 1%, you make 2%, and so on and so forth. And the flip side is you lose if it goes the other way, but you can be liquidated here, especially like yesterday. A lot of people got liquidated when Bitcoin dropped so fast. So many people didn't see it coming, right? I mean, this was a giant drop real fast yesterday. I mean, we went down 11%. So many people got absolutely destroyed. So that would not have happened on the ETF side of things. You would have not been liquidated. So use low leverage. Use low leverage. Practice risk management. Set stop losses. Your goal right now should be winning trades. You're like I said in the first video, you're not gonna be a millionaire tomorrow. You're not gonna have a Lambo tomorrow. So just stop. Just stop losing money. Get back to the basics. Get your trading plan. Get your discipline and stick to it. Stop being smooth-brained and stop doing the same things you're doing over and over and over again and expecting a different result, right? Go back to square one. Relearn this stuff. Dive in. Learn all the indicators. Learn everything you're supposed to learn, right? Because if you don't, you're just going to continue to lose. So use low leverage. Quit using 20 times, 10 times leverage because you're just going to lose quicker. If you're losing, this might not be the video for you. Maybe you're winning and you just want to brush up on your skills, right? Then ignore what I'm saying. But if you're losing and you know who you are out there, stop. So the other side of this is you don't need to do leverage or ETFs or anything. You can just do spot plays. So an actively managed spot portfolio is better than a just set it and forget it. For example, if you would have listened to like real crypto traders, not the crypto bros and crypto Twitter and the open mouth thumbnail YouTubers telling you, right, that, you know, we're coming down. We're probably not going to go to 100K year end, like Moon Carl said, and then said he was going to delete his Twitter account and then never did. And we still have to put up with him. Saying, get out. We're coming down. And if you would have cashed out at the market top, right, and then bought back in at the market bottom, think of how many times on your coins you would have had. It would have been insane. So an actively managed spot portfolio. Now there's a caveat here, right? And the caveat is that you know what you're doing, that you have done the due diligence. You still need the TA coins. You still need to know which way the market's going. You still don't want to listen to crypto influencers or traders, myself included in that. You need to figure this stuff out on your own. So I'm trying to give you the tools here, but an actively managed portfolio is better. It's the same reason I said get out at 31.8 when we saw that same divergence we talked about, 2 videos ago. And then you buy it in when we start coming to the bottom, right? And you're going to buy everything cheaper. In this case with altcoins, just from this top to where we're at now, they're between 30 and 50% off. So you could have 30 or 50% timesed your portfolio just in a short amount of time like this. So actively managed spot portfolios are better than just buying and hodling, because you're going to hodl it right into the ground. You're just going to. We saw it. We saw it with this last cycle. All these people holding coins into the ground. Moral of the story is you do not have to do high leverage perpetual futures contracts. In reality, you shouldn't, especially if you're losing and you're new. You can start off with just 1 times leverage perpetual contracts if you want to get in on a short or something to learn the system. I'm telling you, you're not going to be a millionaire overnight or in the first year or the first 3 years. Learn this stuff first. Go to school, right? This is all this learning, everything I'm talking about in these videos is going to school to get your degree to become a trader. That's what you need to do. And that's how you need to treat this. But ETF trading is great. Spot trading is great. Low leverage trading is okay. Just be careful, practice risk management, and just remember you can do spot plays. It's okay. And a one-time short, I say, is a spot play because you're using only your money. You're not borrowing any money from the exchange. You're not increasing your risk of liquidation, of failure, right? So that's it. That's the video. I just wanted to get that out there, show you guys those 3 L's, 3 S's, and then just kind of reassure you don't need to use high leverage to start. You're not going to be a millionaire overnight. Just kind of add this tool to your belt, and don't get tunnel vision on perpetual futures, perpetual swap contracts, right? That's it. See you guys for the next one. Appreciate you guys. Smash that thumbs up button. Hop in Discord, discord.gg/Alpha Aere. Follow me on Twitter. Alpha Aere is the username, and we'll see you guys for the next one.